Property investment in South Africa is like discovering a gold mine hidden in plain sight. Just as the gold rush of the 19th century transformed the economic landscape of South Africa, today's real estate boom is carving out a new era of prosperity for savvy investors. This is a land ripe with opportunities, a burgeoning market where fortunes are being made and legacies are being built. It's a game of risk and reward, a dance on the razor's edge of economic trends and property value fluctuations. So are you ready to dig deep into the gold mine of property investment in South Africa? Buckle up! Welcome to Money Brief. Don't forget to subscribe and join our community for more awesome content. First things first, why should you consider property investment? Well, property investment is more than just buying a plot of land or a building. It's a strategic move that has the potential to generate significant financial returns. Investing in property can be a powerful wealth creation tool. Over time, property values tend to increase, which means your investment is likely to grow too. It's a tangible asset, something you can see and touch, and that brings a certain level of comfort and security. But it's not just about the potential for capital growth. Property investment can also provide a steady income stream. If you rent out your property, you'll have a regular rental income, which can be a great supplement to your other income sources. It's also worth noting that property investment can be a way to diversify your investment portfolio. By investing in different types of assets, you can spread your risk and potentially increase your overall returns. So, property investment is not just about owning a piece of land. It's about securing your financial future. It's about creating a safety net for yourself and your family. And it's about taking control of your wealth. In property investment, it's all about location. This three-word mantra reigns supreme in the world of property investing. Location is the one thing you cannot change. You can update a kitchen, add a bathroom, or paint the walls, but you can't move a property to a more desirable neighborhood. A good location can significantly affect both the value of your property and your potential rental income. A property in a sought-after neighborhood will likely appreciate faster, giving you a better return on your investment. Similarly, properties in desirable areas tend to attract more tenants, ensuring a steady stream of rental income. Factors such as proximity to amenities, quality of local schools, and the general safety and security of the area can greatly influence how attractive your property is to potential buyers or tenants. That's why it's critical to do your research, consider future developments, and even visit the location at different times of the day and week to get a true sense of the neighborhood. Remember, the right location can make or break your property investment. So, you've found the perfect location. Now, how do you finance your property investment? Well, there are several routes you can take, each with their own set of advantages. One popular option is through a home loan. This is a secured loan where the property acts as collateral, and it's a go-to choice for many investors. But what if you already own a property? You might consider using the equity from your existing property to finance your new investment. This essentially means you're borrowing against the value of your own property to buy another. Other financial solutions could include seeking out a private loan or even crowdfunding. This might seem unconventional, but in the world of property investment, sometimes thinking outside the box can lead to the best results. No matter which avenue you choose, remember it's essential to ensure your financing option aligns with your financial capabilities and investment goals. You don't want to overstretch yourself and risk losing your investment. The key to successful property investment is smart financing. Quick reminder to hit the like button if you've picked up something useful. And if you're not part of our community yet, hit subscribe and bell to stay updated. Property investment is not all roses. It comes with its share of thorns, the hidden costs. When you're caught up in the excitement of potential profit, it's easy to overlook the less glamorous side of property investment. But let's shine a light on these hidden costs to keep you prepared. Firstly, there are bond and registration fees. These are the costs associated with registering your property and securing your bond. They can often add up to a significant amount, so don't be caught off guard. Then there are transfer costs. This is the fee you pay to transfer the property from the previous owner to you. It's a necessary step in the process, and it doesn't come cheap. Lastly, if you're investing in a sectional title unit, like a flat in a block or a townhouse in a complex, you need to be aware of levies. These are monthly fees that cover the costs of maintaining common areas and providing services. These costs may seem daunting, but they are part and parcel of property investment. They're not there to deter you, but to make you aware. Knowledge is power, and being well informed about these hidden costs will ensure you're not blindsided. Always factor in the hidden costs when planning your property investment. Managing a property can be a handful. That's where a managing agent comes in. It's like having a personal assistant for your property. They are the professionals who can help you with the nitty-gritty of property management, from ensuring that your investment is well maintained, to finding the right tenants, and even dealing with those middle-of-the-night emergency repairs. They are skilled in dealing with the legal aspects as well, handling contracts, and ensuring that you are complying with property laws. Having a managing agent can also help you to keep your personal and investment lives separate, allowing you to enjoy the benefits of property investment without the daily hassles. Moreover, a managing agent can be particularly beneficial if you have multiple properties, or if your property is located in a different city or country. They can be your eyes and ears on the ground, ensuring that your investment is being well taken care of, even when you can't be there in person. So is hiring a managing agent an added expense? Yes, but consider it an investment in peace of mind and the long-term success of your property portfolio. A good managing agent can take a lot of weight off your shoulders. The buy-to-let market is a lucrative segment of property investment. This market offers a dual advantage that can make it an attractive option for investors. The first is the potential for a regular income stream. With a buy-to-let property, you can generate consistent revenue from rental income. This can provide a steady cash flow that can cover your bond payments, maintenance costs, and still leave some profit. The second advantage is the potential for an increase in property value. Over time, the value of your property can appreciate, leading to a sizable return on investment when you decide to sell. This appreciation is not guaranteed, however, and depends on various factors such as location, market trends, and the condition of the property. However, it's important to note that a buy-to-let property isn't a passive investment. It requires continuous monitoring, maintenance, and marketing to ensure that it remains attractive to potential tenants. In some cases, hiring a managing agent can be beneficial to help with these tasks. In conclusion, the buy-to-let market is an excellent way to generate passive income. But like any investment, it requires careful planning and management to reap its full benefits. Before you dive headfirst into property investment, do your homework. Due diligence is a term you'll hear a lot in the investment world, and its importance cannot be overstated. This process involves conducting thorough research and planning before making a purchase. It's all about understanding all the variables, all the possible risks, and all the potential rewards tied to your prospective property. This means evaluating the location, understanding the property value trends, and being aware of financing options. You'll want to know about any additional costs like bond and registration fees, transfer costs, and levies for sectional title units. It's not just about the initial purchase price, but also the ongoing costs and potential return on investment. Moreover, due diligence is not a one-time event. It's an ongoing process that continues even after you've purchased the property. Regular monitoring, maintenance, and marketing are all part of this process. And remember, hiring a managing agent can be beneficial in helping you manage these tasks. Remember, an informed investor is a successful investor. Property investment is a big decision. Don't make it alone. Investing in property is not just about buying a house or a piece of land. It's a financial commitment that requires careful planning and strategic decision-making. This is where a financial advisor comes in handy. A financial advisor is like your personal guide, helping you navigate the complex world of property investment. They provide you with expert insights based on market trends, economic factors, and your personal financial situation. They can help you understand the potential risks and returns of various investment options, enabling you to make informed decisions. Financial advisors also help you plan your investment strategy. They can assist you in assessing financing options, understanding tax implications, and managing your property portfolio efficiently. They can help you understand the nuances of the buy-to-let market and guide you through the process from start to finish. Seeking advice from a financial advisor can save you from costly mistakes and ensure that your property investment journey is a smooth one. So, before you take the plunge into property investment, consider seeking professional advice. A good financial advisor is like a compass guiding you through the maze of property investment. So, are you ready to strike gold with property investment in South Africa? Let's recap the nuggets of wisdom we've mined today. Investing in property is a solid way to build wealth over time. It's not just about owning a second home, but about the potential for regular income and increasing value. But remember, it's not a get-rich-quick scheme. You need patience, planning, and perseverance. Location is the pivotal point of property investment. Like a compass guiding a miner, location can lead you to a gold vein or a barren rock. Research, study trends, and choose wisely. Financing your investment is like buying your miner's tools. It could be through your existing property's equity, securing a loan, or ideally, a mix of both. Be smart and consider all your options. Don't forget the hidden costs. They're like the rocks and rubble you need to clear in a mine. Bond and registration fees, transfer costs, and levies for sectional title units. They all add up. A managing agent can be your trusty sidekick, handling administrative tasks and tenant management. They can make your life significantly easier, allowing you to focus on the bigger picture. The buy-to-let market is your mine. It requires constant monitoring, maintenance, and marketing. It's not just about buying a property, it's about managing it as a business. Due diligence is your safety helmet in this mining expedition. It protects you from making costly mistakes and guides you toward profitable decisions. Seeking financial advice is like consulting with a seasoned miner. They've been there, done that, and they can help you avoid common pitfalls. Remember, the gold mine of property investment is there for the taking. All you need is the right tools and the courage to dig deep. If you've reached the end and gained value, express some love by hitting the like button and subscribing. And remember, sharing is caring. Pass this on to someone who could benefit from it.